So today in this video, we are going to talk about how to spot the market reversing, how to spot it shifting, right? You're going to hear me use that terminology a lot, right? Identify the market conditions, identify the conditions shifting. It's very important that you know how to spot this, whether you're getting in a trade, whether you're getting out of a trade, whether you're just sitting back watching the market do its thing. See, it's a battlefield, right? The market is an auction, but it's a massive war zone. It's buyers versus sellers constantly. It's sellers versus buyers constantly, right? It's literally a breakdown, a graphical presentation of human behavior. And the better you could look at it that way, the easier it's going to be for you to get into trades, get out of trades, and more importantly, hold on to trades or cut losers when you're supposed to, right? So basically, through all my years of trading, I've found a very simple way to spot this, right? We're going to break it down in a very quick video, right? You use your critical levels, right? You have price coming up to end of day, right? You got to watch the candles, right? Because how price reacts to the critical levels, right? Look at it. Come into end of day, reject. Come below open print, come into the cloud, reject. Price makes its way down, all the way down to previous day low, right? And now the market looks something like this. This right here is what we call a green bar. See, prices drop below previous day low. We've identified a downward trend, right? So now it's up to us not to spot the reversal, right? But more importantly, to see who controls the level. See, when you trade in this way, right? When you have a very simple system that you use to identify your opportunity, you no longer predict. And when you predict, you lose money. You get emotional. You make emotional decisions trying to predict what's going to happen. It never works, right? So what we use is the RBI and the GBI, right? In this scenario, we have a green bar that is coming up to previous day low. Very simple retest, right? Now what happens after this green bar is going to tell us everything. There's two things that can happen, right? Price either breaks below the green bar, which means the green bar was ignored. At this point, we then take the market short, targeting our key level. A key level is just another term for a daily time frame level, right? Because the levels hold the volume. We can't move the market, the banks do. So it's up to us to spot who is taking control of the level, right? And based on our ability to spot either strengthness or weakness, we then have opportunity, right? So we have the green bar. The first scenario is sellers take control of it. The second scenario is buyers take control of it. Well, how can we, right? What sort of system, what sort of simple presentation can we have that goes, okay, I'm either getting in short or I'm not, right? I need to see the candle close below, or I'm sorry, break below that green bar, right? So you're going to see right here on this candle, we literally broke below that green bar, right? Probably about a penny. So I held off on that entry until this next candle. When this next candle ripped up into this close, we then came down below the green bar. I entered short. Very simple way to identify a trend continuing. Doesn't work every single time. Absolutely not. But the reason why it's so effective is because my stop loss is literally above the previous candle, right? Risk, reward. Okay, price sells off into our key level. Beautiful, right? But the purpose of this video was to identify a reversal. But you cannot identify a reversal properly until you can identify a continuation, right? That's why the first example was of a continuation. That's what you want it to look like when you are entering a trade. Now, what happens when the market shifts? Well, it's very simple, guys. You use the key level, right? You use the price action at the key level. Notice this trend here, right? It's continuously making green bars that were ignored, right? We get a green bar ignored at open print, sells off. We get a green bar that comes up into the 50 EMA that was ignored, sells off. We get another GBI, right? Which this bar ignores it, right? So the trend is being respected. So what would it look like if the trend was disrespected? Ready? Very simple, guys. The same exact thing. Notice this GBI right here. This is the one we got in short. Now price comes back up to previous day low. Now, what are we looking for? We're now looking for a red bar to be disrespected, right? Once again, does it work every single time? Absolutely not. But this is one of the best ways I've found to identify either strength with trend or the trend reversing, right? And it's a very good way because it gives you very low managed risk, right? So we come into previous day low. We come into the 50 EMA, right? Now we get this red bar right here. This next green candle blows over the top of it, disrespecting the sellers, completely ignoring the red bar. That would be your entry long with your stop below the candle, right? And in these market conditions, we have to have very good, managed, reasonable stop losses. Otherwise, there's no way to obtain consistent results, right? And there's one thing I want to point out here. When you long this, right, your upside target's going to be open print, right? Because we want to play the imbalance, right? The market imbalance is the space between two pit numbers, two critical levels, or supply and demand, right? Because all the volume's at the key levels, right? Well, most of the volume, most of the liquidity. So once again, large money has to move price. They're going to move price in between these levels. It's just how the auction works, right? So you take the market long. Now, another point I wanted to touch on in this lesson was how this strategy or understanding our philosophy helps you hold your trades longer, right? I talk to a lot of traders, I coach a lot of them, and one of the main issues is I cannot hold my trades. I struggle holding my trades. Well, the more reps you put in and the more understanding and wisdom you have of the market auction and how it works and what it looks like, the easier it's going to be for you to hold your trade. Now, don't feel bad. I struggled with this issue for years, right? But one thing that helped me finally get past that hurdle was the GBI, right? And the RBI, because think about it. When you enter a trade long or short, you want to see the price rip up to where? Obviously open print, but we're probably going to have some battles here up here at these GBIs, right? Because that's exactly where buyers got into the market and now they're getting stomped out of the market, right? Or I'm sorry, sellers got into the market here and now they're getting stomped out one by one by one, all the way up to open print. So use your RBI, use your GBI, use your market structure, use your moving averages, and more importantly, use your pit numbers, your critical levels. Guys, before we wrap up this video, we just cut Trader Bootcamp in half by 50%. Listen, I'm going with this massive promo right now. You purchase Trader Bootcamp, right? You get 12 months full access with the Discord team. I wanted to make it effective and affordable so people can come level up, right? You'll have full access to the live trading sessions, the live webinars, right? Mentorship webinars, everything, guys. If you are involved, if you want to get involved, click the links below. Make sure you hit a like, subscribe for more content. I'll see you all in the next lesson.